Now, investors have their attention fixed on today's 1 trillion naira T-bills auction, which beats records dating back to the year 2001. Meanwhile, the Republic of Benin first dollar bond offer was oversubscribed by over 6 times, marking a pickup in sovereign debt offerings from the continent this year. Ladi Bello, head of fixed income at Axis Bank, joins me now for more on these. Ladi, thank you so much for joining us on the show today. This 1 trillion naira T-bills auction today beats records, definitely. But what does this mean for the market when we're talking about the shift in monetary policy direction and also the expected reflection when we're looking at interest rate increases and significant auction volumes?
Hello, David. Thank you for having me. Like you rightfully said, we have 1 trillion NTB auction being floated by the DMO today. It's a bit of an anomaly this time around since we have just 417 billion being rolled over initially by the calendar that was released earlier this year. So what that would mean would imply more supply in the market. In a market that's already fairly liquid, we opened the day with about 26 billion. I'm sure you know that. So what we would expect is for yields to generally trend upwards significantly, stemming from the lack of appetite on the short end of the curve, and also the need to bring back some of our foreign investors into the secondary markets, which will also bolster some of our FX reserves on that side as well. So from the previous auction where we saw the 91-day trading at around 5%, 182-day at 7.15%, and the 1 year clearing at 11.54%, we're definitely going to experience a significant hike or increments in rates across board. We expect to see the 1 year NTB, which is what all eyes are on, trading definitely around the 500 basis points up from previous levels. And generally what we expect to see will be a general upward trajectory in rates across all fixed income instruments.
Yeah, and now let's also talk a little bit about how the market is responding to some of the feelers we've gotten from the central bank governor. Now, just yesterday, he appeared before the Senate, now looking at the fall of the naira. But in terms of some of the short-term measures being initiated now, it says, well, these are supposed to make naira assets much more attractive for foreign investors. Let's talk about how the pendulum will likely swing for the naira when we're looking at trading against the greenback and other global currencies.
Okay, well, previously what used to be used to control the money supply in the market as well as to attract offshore investors, what we call the OMO auctions, which essentially mops up the money supply in the market. So what we've seen is a bit of a convergence between the policies of both the CBN and the DMO come into play, hence why we're having a 1 trillion auction. As you also said, Olayemi Cardoso, the head of the Apex Bank, intervened and spoke to the market. And what we've seen is a bit more confidence. We've seen a lot more transactions happening in that space. The official market rates have traded between the 1,350 and 1,430 mark. Definitely higher than previous levels, but we've seen a lot more participation from offshore investors, which is what we need to kind of bolster the activity within both markets. We've seen a lot of transparency in terms of the policy implementation, and we expect to see more policies being rolled out to stabilize the FX in the market. Like he mentioned, we have 7 billion in backlogs, of which we have about 2.4 billion that are not necessarily valid but are still being in the inspection process. So we expect to see these rates depreciate, if I'm being honest, a little bit further to settle some of the outstanding obligations by the CBN, which will happen in due time.
Yes.
But before then, we will see a lot more activity. We've seen several hundreds of millions of dollars in terms of turnover being transactioned in the markets over the last 48 hours, and we expect to see this pace of activity continue in the near future.
According to the CBN governor, about $844 million was the worth of volume of transactions we saw as at Monday. But now let's look at the wider West African economic market now. For you, what do you make of the latest move? We're seeing an improvement, pick up in sovereign debt offerings so far this year. One of the latest, we have Benin Republic having its $750 million bonds come to bear. We heard of the investors, the country going over to investors in New York and also trying to get them on board as well. Now we've also seen that of Cote d'Ivoire come through earlier on in the month of January. So for Nigeria and Ghana looking to have Eurobond issuances this year, what does this mean for the market as well in terms of what we have to offer?
Okay, so last week we saw Cote d'Ivoire coming to the market to float Eurobonds. We saw general subscription in excess of $8 billion, which is quite healthy. They were able to sell about $2.6 billion in the markets, the longest tenor clearing at around 8.25%, which signifies there's a lot of interest within this region. Let's not forget that they're not the first to release Eurobonds into the markets. In the emerging market space, we've had several other counterparties, but within the sub-Saharan African space, this will instill a lot of confidence in the markets. Also, one thing to realize is that usually these Francophone countries issue these instruments denominated in euros, but this time around they've been able to access wider markets as they've denominated their instruments in USD this time around, hence why they've been able to garner such kind of interest to the tune of about $8 billion for Cote d'Ivoire. Speaking to Benin Republic specifically, we saw them clear at about 750 million. On one instrument, we had the general subscription in excess of 5 billion, which represents 6 times over what they were looking to raise. And again, rates cleared at about 7.96%, just shy of the 8% mark, which represents a fairly low yield in this climate that we're in. And obviously, it's bringing rise to some of the other sub-Saharan African countries coming to float their Eurobonds in the market in some coming months as well. I would say there's a lot more eyes on Nigeria, as there's a bit more room. Our debt to GDP is fairly low when compared to some of the other sub-Saharan African names. And let's not forget, the reason why the Cote d'Ivoire instrument was oversubscribed many times over is because they are a Francophone country, first of all, and they're not overly reliant on energy.
Yes.
The credit rating is pretty stable at B, stronger than most of the other sub-Saharan African countries. So you would have to compare to the likes of South Africa, who has also fairly low yields in their markets.
Exactly.
So when you compare it to some of the other sub-Saharan African countries who require a slightly increment in yields to float their instruments in the market to garner the same type of interest, I think we're going to see a little bit more issuances in the market.
Sure.
But I don't want to get too carried away with the case of Ghana. They will need to settle their obligations as at when they fall due. Currently, we all know that they've defaulted on their obligations, and they would have to make good on their promises to their external creditors before they even consider gaining any traction in the primary market again.
Exactly. Well, we've also heard from the Bank of Ghana governor, and they're looking towards March this year, and the finance minister as well, to actually have a deal with this, to gain much more traction when we are looking at the Eurobond interests. But Ladi, thank you so much for your time on the show today. It's been a pleasure speaking with you. That was Ladi Bello, head of fixed income at Access Bank.